Yo, good day everyone, it's Kelly Sunder. Welcome to this YouTube video. In this YouTube video, we're going to be talking about simple market structure. Everything you have to know about the market or the market structure, how it forms and everything. That's what we're going to be talking about in this video. So do well to actually sit tight, okay? And make sure you watch this video to end to understand better. Yeah, currently looking at this candle charts like this, it does not mean anything. It doesn't mean what? It means nothing. Only when you start putting things in contrast and putting things together to build a trade idea or a trade setup. So overall, do well to like, subscribe and share this YouTube video. And this is also part of the beginners course in our YouTube channel. And once again, this is a new year. Happy New Year to each and every one of you watching this YouTube video. Welcome to 2023. Believe me, 2023 millions will definitely be made this year. Okay, only if you want to make millions anyway. So do well to join the 2023 Sunders FX mentorship, because I'll be teaching so many other things and I'll be breaking down so many other things you have to know. The links will be at the video description or the pinned comment. So do well to check it. And also this video will be having a timestamp, okay, so that you can skip or jump to any part you wish to watch. So let's get started. So basically people ask, what is market structure? Overall, market structure is definitely is just the structure in which the market is forming. So overall, we have when the market is in an uptrend, the market forms what? Higher highs and lower lows. So when the market is in an uptrend, the market forms a what? Higher high and a lower low. Yeah, forms higher high, a lower low, then a higher high. So when market is in an uptrend, this is basically um the structure you'll be seeing. Market will form a higher high, then form a lower low, then extend to form another higher high. So this is basically when the market is in an uptrend, right? So let me be putting that in text so that you will understand better. Reduce the size to 12, text color black. Okay, higher high, you can simply use HH for higher high. Click on OK. So this is I want to move this. This is a higher high right here. Can actually copy it. Copy. This is another higher high. I don't know why my okay, clone. Let me just clone it. This is another higher high. This is a higher high. This is a higher high. Then for the lower highs, right? For the lower highs, let's edit that. Lower high. So this is the market structure you will see when the market profile or the market structure is in what? Is in an uptrend. You'll be seeing higher highs and what? Lower highs. We'll still go into the chart to show the chart example. So this is a lower high. Cloning this. So LH simply stands for what? Lower highs. Just using short form. Then I don't know why this came here. Okay, this is a lower high. I don't really like this bracket I'm seeing, so I will be editing it. I don't want to see any border. Okay. So basically all these settings should actually been set since, but I don't really know why I didn't, so just bear with me. But I believe you all are learning how it's being done also, because that is the essence of watching this beginners content, of course. So I'm just trying to explain this, then we dive further, right? So higher highs, so this is for what? Uptrend. When the market is in an uptrend, this is what you definitely see, right? You see higher highs forming and lower highs forming. That is the market structure for what? Uptrend. Okay, that is the market structure for an uptrend. So but when the market is in a downtrend, what are you going to be seeing? You'll be seeing market structures like a lower low, then a higher low. When you see a lower low forming, then you now see a higher low, then you now see another lower low, breaking lower. You understand? I'll be also talking about break of structures very, very soon. Then you see another retracement. Please just understand my sketch, okay? Shouldn't be that perfect. I will try my best. I'm not an artist, I'm a trader. Basically just because of I'm teaching you guys, so I'll try to make everything perfect. So this is for downtrend, right? This is for downtrend. You see what? A lower low forming, a higher low, lower low, higher low. So this is basically for what? Downtrend. Okay, this is when the market is in downtrend. This is the market structure you will be seeing in the market. So this is for downtrend. Downtrend. Okay, let's leave it like this. So this is for downtrend. So overall, you have seen how the market structure is when it's in an uptrend, forming higher high, lower low, higher high. You know that yes, this is an uptrend. And if it's in a downtrend, you'll be seeing lower highs, lower low, that is LL, then a higher low, which is HL. You understand? That's just the abbreviation. So having this in mind, or this context in mind, let's actually move into the chart to explain further. Okay, so this is just the basically looking at this chart right here. You see that it's a downtrend down to here. So you see a market going low, right, retracing. Okay, before that I will be explaining the characteristics or of market profile. So in the market actually what does four things, right? And those four things you should look out for. So let me mention them right here. So the first is what market actually what consolidates. It's either the market is in consolidation, or the market is expansion, or the market is expanding, or the market is retracing, that is retracement, or the market is in a reversal. So this is the four market profile you expect to see what in the market. Okay, it's either the market is consolidating, which we can see here. Looking from here, you see that yes, the market is what consolidating. Consolidating means it's not forming a higher high, it's not what forming a lower low, it's just going up and down in a particular what in a given range. So right here you can just say that yes, the market is what consolidating, because once it reaches this high, it comes back to this low. Once it's reaching this high, it comes back to this low. So now this is an expansion. You can see an expansion here right now. So overall you see an expansion here. The market expands lower, right? Then also here we now see a retracement that broke structure higher. So this is a retracement. Okay, this is a retracement right now after the expansion, because consolidating expands, then market definitely what retraces. Then after a retracement you expect a what a reversal, which is what is happening currently, or it has happened already probably. So this is a reversal. So these are the three things you expect, or four characteristics or you expect to see in the market structure, right? You expect to see the market consolidate, then expands, right? Then probably retraces, then also reverse. There is no other movement like you will see in the market that is not these four things as mentioned here currently, right? So probably having this in mind, when you see a market consolidate, you know that yes, an expansion is going to be soon. But sometimes, remember, we are in the monthly time frame, right? This is happening in the monthly time frame, so this actually takes long to play out. But if you also break down to the lower time frame, you will also see all this stuff I'm explaining currently. You understand? That is just basically how it works. So this teaching, I'm just teaching simple market structure. But with that, let us break down lower also to see how we use this market structure idea to, form a trade, frame a trade or a trade setup, right? So we'll be using this market structure idea now to actually what form a trade setup. Understanding these four concepts, believe me, this is just a beginner's aspect. I don't want to take anything deep, or this is just simple market structure explanation. That is what we are actually talking about today. Okay, so once again, if you're watching this video up to this point, please do well to like, subscribe and share this YouTube video. We really appreciate. So I'll be breaking down to the lower time frame right now, so that we'll see how the market is on the lower time frame. So I'm trying to remove these lines, as you can see. I think I'll not remove all, but like, yeah. So coming over here, this is the monthly time frame. Let's zoom in. So zooming in on the monthly time frame. So basically, you want to do your analysis now, seeing the market structure. You can just pull out your horizontal ray, mark out the high, the current high of the month. You can use the body, you can use the wick, but I prefer using the body because that is where the volume ends. So this is the current high on the monthly time frame, right? Now this is how to use market structure to what frame a trade. So let's mark out the immediate low on the monthly time frame. So you have marked out the immediate low on the monthly time frame. So you just drop down to the weekly also. Once you drop down to the weekly, you see other structures you can see. So going down to the weekly time frame right now, let's cancel this. So going down to the weekly time frame right now, you can see that yes, the market also was consolidated right here. This is a massive consolidation, but it's a weekly time frame. You don't really have to. Okay, going down to the weekly, let's adjust our highs and lows, because I can see it's basically now clear to mark it out from the weekly. So let's use this is the high now, because it's more clearer now. So let's use this at the low also. Low. Okay, so now there are so many other things I'm seeing here. I'm seeing other blocks, multiplication block, old highs, old lows, right? Fair value gaps. There are many things I'm seeing here, but it's not what I'll be talking about in this video, because in this video it's all about explaining, right? It's all about explaining simple market structure. So overall, I've tried to show you guys how the market structure works, but just trying to also use it to frame a trade setup. Okay, so here, from market structure, now you see market breaking what higher. So once market actually broke higher, let me show you guys, so that, let me put it in description. So I'll be removing this so that it will be in description. So here, so look at here, this is a structure being broken right here. This body was being taken out. Oh, I'm using horizontal ray. I was meant to use this. Okay, so from here to here, you can see that this week, although it's a week, but it's actually what broke higher. What is going on? Doesn't want to go. Okay, so it's broke higher. So you can actually annotate it. You can use your templates. Okay, since I'm not seeing templates, I'll be editing it. Let's go to settings. Let's put a text, break of structure. Let's make it bold. Let's increase the size to 16. Okay, here, over here, let's zoom in. Oh, sorry. Yeah, Okay, let me make this at the top. Let's make the writings to be at the top, top right, top. Okay. Okay, here there is a break of structure here, as you can see. So now you have seen a break of structure. All you do is break down to the what? Daily time frame also. So once you break down to the daily time frame, everything becomes more clear. So and this is a mitigation block anyway. So the market mitigated here, then you expect a retracement maybe down to this fair value gap, because there's a fair value gap here, and this is a bearish order block that you can buy into. But all this is not what we are explaining here, but I'll just keep saying it so that you start hearing the words currently from now. You understand? So that when I'll start talking about it, it will not be new to you guys again. Okay, control. Okay. Now, so what do you expect? So these highs now are probably old highs on the daily, and you buying here once market also takes out this high currently, you expect the market to actually retrace. So now, having this understanding, when you see market taking out a high, sometimes you do what? Expect a retracement before going further. It's not like buying like breakout traders. Once they see a high is being taken out, they are in a buy and it retraces and they lose money and they don't know what is happening. So understanding simple market structure really helps you more in trading overall, right? So that is basically what we are talking about here. I don't want to go in advance because me talking too much in this video is gonna lead us to learn so many advanced stuff. But just understand what we have talked about. When the market is an uptrend, you can see here this a higher high, a high, a low, although it did not break, so a lower high, uptrend, a higher high, a lower high, a higher high. So you can see that this market now is currently, the market structure here is what? Bullish currently. Onto a low is what? Breaking. Once it's break lower, you now notice a what? A break of structure. You understand? Like right here now, there is a break of structure and this is a retracement. So you don't also expect this high to take out this high. So you expect to sometimes sell into this break of structure because the market has actually broke lower on the daily time frame. Let me show you guys what I'm talking about. Because we are focusing on the what? Immediate market structure. We are not looking at what happened 10 years ago or 5 years ago. This is where our focus is. And where is our target? This other block to buy into, to go to take out these highs right here. So let me highlight these highs also. So you don't really expect the market to go straight to these highs immediately because it has what? How will I put it? It's going up. No. So from here now, you see that market broke structure. If you expand to the lower time frame, you see that here this is a break of structure. Okay, this is a break of structure right there. There's a break of structure. Then the market probably is retracing now to what? To drop. So market drops also. Which what is the framework I'm looking out for here currently now is the framework I'm looking out for here is basically to see the market here, which is currently here, then market taking out this low. Once market takes out this low, I'm looking for my tool. Okay, you expect a retracement again, but not taking out the high. So probably your stop loss will be here. So let's say we are going short. Okay, let's bring out the short position too. So our entry will be right here. Then where will our stop loss be? At this high, we don't want it to take out. Then where will our take profit be? At this fair value gap bullish order block. So currently now we have actually what? Framed a trade. With understanding simple market structure, we didn't even add so many other factors, fundamentals, and all the rest of them. Just with this video we are actually learning right now, we have understood that yes, it's in as much as we are in a downtrend, but there was a break of structure. So once you see a break of structure, like after an expansion, probably a reversal and a retracement. So having all these things in our in heart, we have seen that yes, market is not really gonna take out these highs immediately. So it's gonna come down here first, okay? And this is the daily time frame. So bear in mind that this will take longer to what happen. You understand? It will not happen immediately. You understand? So from here also, what else do we expect to see in the market structure if everything being normal or every circumstance you still not expect the market to take out this side? So overall you're bullish, but due to you have the understanding of market structure, you don't just buy anywhere, right? So many people will be seeing to buy. Some the market can actually even decide to take out these highs right here before dropping. You understand? It will not be a total soup sell. So the market, once the market choose to take out these highs before dropping, so market taking out all these highs before dropping, so your entry will definitely be here for the sell. But many people still wants to wait for confirmations before they take a trade. You don't just enter a trade just like that, right? So anything can happen, but once you have this knowledge, right, you have many ways, many scenarios you're looking out for. So it's just for you to keep compounding, adding more trades, closing more positions as the trades, proceeds. You understand? So I just want to be stopping here for this simple market structure video. So once again, I thank you all for watching this YouTube video. Like, subscribe, and share. Okay, and bye bye.